All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about the Coppock curve. Now, this has grown to become one of my favorite indicators. We're going to go over why that is. Some of the key points that we'll cover in today's video are going to be the basics, how to interpret the curve, the zero line crossovers, its emphasis on a long-term focus, and how you can combine it with other indicators as well to help give you a little bit more clarity. In this case, we'll use the MACD, and then you can it also helps you avoid whipsaws, and it's got great historical reliability, which is really my favorite part, that and the long-term focus. So we're going to cover all of that in today's video. It's going to be a good one. Smash the like button, subscribe if you're not subscribed. And as always, the content provided on this channel is for informational and educational purposes only, and it's not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. And let's go over the basics here. So the Coppock curve identifies buying opportunity when it moves from negative to positive. It's a tool that's been historically reliable for spotting major market bottoms. And so to find out when it's going from negative to positive, you're going to need to add a drawing here. And this red line is the zero line. So you're going to want to add the Coppock curve to whatever platform you're using and put a drawing there at the zero line. So that way you can tell whenever it goes from negative to positive, right? As you can see here, it crosses down below and then it crosses back above. So that's going from negative to positive. Now, to interpret the curve, it's pretty simple. Okay, a rising Coppock curve suggests a potential bull market, and a falling curve on the other hand can indicate a looming bear market. So you see we have a rising curve in this period, and the market is bullish, is also rising here as well. All right, now zero line crossovers. In my opinion, that's the main thing that you really want to pay attention to. So when the curve crosses above the zero line, it's a buy signal. A cross below isn't a direct sell signal, but it's a sign to tread with caution. Now, I do want to mention that the Coppock curve is, we'll dive into the long-term focus in a little bit, but you mostly want to use this on the monthly time frame. So each of these candlesticks that you're looking at, these are monthly candlesticks, and that really helps emphasize the long-term focus. Now, you can see here, we cross up above and we go on a 306% rally. Here we cross above, we go on an 80% rally. Here we cross above and we go on a 100% rally. So it's a really, really good indicator for, again, spotting those potential bottoms and capturing those, nice bull markets and capturing those moves. Again, with the long-term focus, it's primarily designed for the monthly timeframes. This makes it an ideal tool for those with a long-term investment horizon. So not so much on your day-to-day basis, again, much more of your long-term focus. And being that these are all monthly candlesticks, it's really going to help you weed out a lot of the noise in the market, being how reliable and how historically accurate this indicator has been. Of course, no indicator is ever going to be 100%, but it's a really good one, and it's definitely one of my favorites that I've grown to learn, and I think you guys will really enjoy it as well. You can take a look here. In 1975, we get a nice crossover. We rally up 60%. Okay, and then in 1978, we get a nice crossover, rally up 84%. Over here in December of 82, we get a crossover, rally up 40%. And then in December or February of 1985, we get another crossover here and up 81% almost, after that crossover. So really, really nice indicator. And again, focusing on that long-term horizon, being that these are monthly candles. And so you can kind of sit back and not have to worry so much about the day-to-day. Now, when you combine it with other indicators, and in this case, we're going to use the MACD, this can offer a comprehensive view of the momentum. Together, they can help validate signals and provide a more rounded perspective. So in this case right here, this is our MACD up here, and you see we actually get a bullish crossover on the MACD slightly before our Coppock curve. And then very, very shortly afterwards, basically the next tick over, you can see that we get the crossover on the Coppock curve. So basically two signals at this point in time, suggesting that, hey, there's lots of momentum on the larger time frames, and it looks like we're about to go into a bullish cycle. And you can see how long that bullish cycle lasts. Again, being that these are monthly charts, monthly candlesticks, this was a 2-year long bull market when you take a look at the time period here from 2017 down to 2019. And that was basically your signal kind of letting you know that the bottom was in, okay, and that you could look for the next move to the upside in the bull market, right? And it also helps you avoid whipsaws. So here, basically, I have an example kind of a whipsaw for you. Now, that's because of its long-term focus. It really helps you avoid those whipsaws that shorter-term indicators might face. It's all about clarity over the long run. So when you take a look here, right, this is when we get our Coppock curve crossover right at this moment, right? And it looks very noisy, right? Like if you're looking at shorter term indicators, once you see these two red monthly candlesticks, if you're looking at daily candlesticks within those 2 months, or you're looking at even smaller time frames, 1 hour and things like that, you can get spooked out here and think that we're going to actually cross back down below. And you can see it really consolidates, and we really don't go much of anywhere for about 5 months. Okay. Now, after those 5 months, if you were able to hold, what do you see? We actually pull back here, okay, and get a pretty significant pullback. But our Coppock curve is still above that zero line, and our indicator here, gave us the signal. All right, and we ended up rallying over 63% throughout this time period. Again, being a much longer time period from 1991 all the way to 1994, really helped to weed out a lot of the noise that you would have had experienced in the first 5 or 6 months. And then also through, this 6, 7, 8 month time period here could have got pretty worrisome, pretty troublesome. But, ultimately the indicator had that long-term focus, and you can see for the next few years, we continued to rally and stayed in that bull market. And then, when you look at the historical reliability, the Coppock curve has been a beacon of reliability. It's been particularly adept at spotting major market bottoms. Now, this doesn't mean that it's going to call the bottom when the bottom comes. It's able to spot the bottoms after they have happened. Okay. Meaning that, you don't necessarily have to worry as much that we're going to continue this downtrend, right? Notice how we come down, then we rally, we come down, and then we rally. And here, all right, this is the dot-com bubble in particular that we're looking at. There were a lot of bear market rallies in here. There's a bear market rally there, bear market rally there, but we never got the Coppock curve crossing above the zero line. Here at this point is actually when we cross above. And this is kind of letting us know that, hey, this potentially was the bottom, and we were able to spot this as the bottom. And we can now potentially look to the future for a bull market. And that lasts all the way from 03 up until the great financial crisis in 08. And then once the great financial crisis happened in 08, you can see that we recovered out of there. We got our Coppock curve crossover here. And this kind of let us know that, hey, the bottom was here at this point, and now we can look towards the future for the next bullish market cycle. And again, it really helps weed through that noise, because even if you entered here and you see that we had the strong pullback here, okay, we actually stayed in that bull market, all right, and continued that bull market, for a very long time, for years and years to come after that. So that's really why I like it a lot. And in particular, in 2023, I like it because of this historical reliability and the fact that we're seeing many stocks and indices getting that monthly crossover. So to me, it's weeding out a lot of the noise that we experienced in 2022 and early 2023. And now, there may be noise, it may be choppy, but it appears that we're getting the next bull market, and we're entering the next bullish phase, for many sectors and indices in the market. At the end of the day, practice makes perfect. So before diving in, you want to practice using this indicator on a demo account or with some paper trading. Oftentimes a lot of platforms have it where you can go back in time. They have some, kind of rewind feature, or Thinkorswim has the on-demand feature, and you can get a feel for the indicator and understand its nuances. You can even try to apply it to individual stocks. Now, of course, being that they're monthly time frame and it's best used on a monthly time frame and a long-term horizon, if your stock hasn't been around trading for more than 10 or 20 years, you may not have as much data on the Coppock curve versus something like your major indices, such as the Dow Jones, the S&P 500, or even the NASDAQ, right? You take a look at some of those, and there's going to be a much larger data set to go back and test and get a feel for how it works. Hopefully you enjoyed the video on the Coppock curve. If you did, smash that like button, okay? Now, So this is my newsletter right here. It's called Investment Intelligence. There's a link in the description. Okay. If you're fans of free, valuable finance content and you also enjoy free trade ideas, you're really going to love the newsletter. Okay. I try to sprinkle in a couple of free trade ideas every single week. This was one on Tesla we had a little bit over a month ago, highlighting some of the conditions we saw on the chart. There was a bullish abandoned baby chart pattern. We're also retesting a trend line we've tested a few times, as well as a major resistance level, and we were trading above the 5-day moving averages, basically highlighting all of that and the things that we were looking for. Okay, and you can see how that trade turned out. It turned out very nicely. We got a very clean and textbook, breakout and retest. You see, we get the breakout, retest, push up higher, right? Come up right to resistance here. And it was a very, very nice trade, especially if you trade something like options, which, I go over options and a few things about options in my newsletter as well. So, feel free to subscribe to that. It's completely free to you guys. If you're fans of free, valuable content and free trade ideas, you're definitely going to enjoy that coming straight to your inbox. And it's a great way to help me, grow my brand and support the channel. Also, you can head on over to Ko-Fi. There's a link in the description for the newsletter and for Ko-Fi. On Ko-Fi, this is where you can directly book your one-on-one sessions with me now. Okay, you can book a 1 hour or a 30-minute session by simply coming over here to the commissions tab. This is going to be the best way to get in contact with me and reach out for those one-on-one sessions. You can also request a specific YouTube video if you want me to make a video on the topic of your choice, whether it be a specific indicator, maybe it's a strategy or a walkthrough tutorial, or perhaps you want me to do an analysis on a specific ticker you're looking at, whether it's fundamental or technical, I'll be happy to do that. Just simply click on that request a YouTube video and I'll try to get to it as soon as I can. That's where I'm doing all of the viewer requests now, as well as they have this nice little buy a coffee button. It's basically a form of giving a tip or donation. If you ever enjoy the free, valuable content I put out, you can always click on this buy a coffee button, to help support the channel and help support the content I bring to you guys. Appreciate you watching the video. I'm out.